Accounting period. The time for which profits are being calculated, normally months, quarters or years. Accounts. Businesses are obligated to produce an annual set of accounts. If they are listed on the stock exchange, they must also show half-year profits, information regarding profits 6 months into the financial year.
Bid-offer spread. The buying, offer, and selling, bid, price of shares, bonds or currency. The spread is the difference between those two prices. Black swan. Financial events that are difficult to predict. It is called this because before people ventured to Australia, swans were assumed to only be white. No one had seen a black one until then. Blue chip. This term originates from poker, as blue chips are traditionally the highest valued. Therefore, a blue chip company is one that is large and considered to be safe or prestigious. Bond. An agreement made when money is borrowed from an investor at a set rate of interest. It is repaid over a set period of time. Bonds are rated from the safest AA to the riskiest D, also known as junk bonds. Creditor. A person or firm that has lent your business money or to whom you owe money. Critical success factor. A critical success factor is an element that must occur in order for a business to achieve its ultimate goal. Copyright. The exclusive legal right, owned by the individual or group who created a work, or by an individual or group assigned by the originator, to use certain material and to allow others the right to use the material. Corporate social responsibility. Corporate social responsibility, CSR, is a form of self-regulation, where companies integrate social, environmental and ethical policies into their overall business strategy. Companies embracing CSR should take responsibility for their actions and take a proactive approach to having a minimal negative impact on the world. Cash flow. The movement of cash into and out of a business. Collateral. Collateral is something lenders can use to give security against a loan. Often this is a major asset such as a house. Commodity. This is any item which can be freely bought and sold. Examples include gold, food products and coffee beans. Capital. Money invested into a company or project by its owners. Capital expenditure, CapEx. Money spent to create future benefits. Capital expenditure is money spent by a company either to buy fixed assets or to add to the value of existing fixed assets with a useful life that extends beyond the taxable year. With regard, business angel, also known as an angel investor. An individual who provides capital for a business startup in return for a stake in the company. Business cycle. The tendency for economies to experience peaks and troughs that follows a cyclical pattern, known colloquially as boom and bust. Governments are tasked with smoothing the peaks and troughs and limiting the effect of these cycles on consumers and businesses. Bootstrapping. 1. Building a startup company with very little money, often relying on personal savings and pushing for the lowest possible operating costs, while implementing cost-saving systems such as fast inventory turnaround. 2. Making a forecast beyond a certain period by using the forecasted data for that period. Break-even point. The point in time when you will have paid back all your debts, or when revenues exactly match expenses. Bridging loan. This loan is taken out by people who need access to finance while their property is being sold. Balance sheet. A snapshot of a company's assets, liabilities and capital at a particular point in time. Base rate. Set each month by the Bank of England, this is the country's base rate of interest. This influences financial products and services when they set their own cost of borrowing. Benchmarking. Checking your company's standards by comparing them with certain criteria, e.g. a competitor's activities.
Accounts payable. Amounts of money owed by your company to external suppliers. Accounts receivable. Money owed to your company by customers. B2B. Business to business. B2C. Business to consumer. Arbitrage. The process by which a person or business takes advantage of the difference in price of a share or a currency. Assets. Property that has value owned by a company. Audit. An official inspection of a company's, or individual's, accounts. Annual percentage rate, April. This is the rate of interest you agree to pay on money borrowed. The higher the amount, the more you will pay. Annuity. This is a type of insurance policy. Upon retirement, a lump sum is paid into it and the insurance company then provide a regular income. Affiliate marketing, a retailer or service provider advertising its goods or services via a third party in return for a commission on any sales. Annual equivalent rate, a quote of what interest paid on savings and investments would be. It is calculated by adding each interest payment to the original deposit, then working out the next interest payment, compounding the interest. Administration. There are two meanings relating to this word in business. 1. The organization and running of a business. 2. A business going into administration, meaning that a business has gone bankrupt and its creditors can get in touch to try and claim any money they are owed. Acquisition. The purchase of one company or resources by another. Actuary. An actuary is a person employed by pension providers and insurance companies. Their role is to calculate accident rates, life expectancy and the relevant payouts.
Debtor, a person or firm that owes money to you or your business. Depreciation, the reduction in value of assets over time, usually due to wear and tear. Diversification, when new products, services, customers or markets are added to your company's portfolio. Diversification usually occurs as a risk reduction strategy.